After days of panic selling and markets scraping 18-month lows, Tuesday brought a much-needed breather for global investors. Asian stocks bounced back sharply and US futures pointed higher, buoyed by growing speculation that Washington might finally be open to negotiating some of its hardline tariff measures. The recovery was led by Japan's Nikkei 225, which surged 5.6%, its strongest one-day gain in months. The rally followed news that U.S. Treasury Secretary Scott Bessent and Trade Representative Jamieson Greer had been tasked with leading trade talks with Tokyo, which is one of Washington's key allies in the Asia-Pacific region. Across Asia, there was a noticeable shift in investor mood. Hong Kong's Hang Seng climbed 1.7%, while mainland China's blue-chip stocks inched up by 0.6%. Similarly, South Korea's Kospi added 1.3% and Australia's benchmark index rose 1%. However, Taiwan's equity markets remained under pressure, with its index falling 3%, adding to the damage after Monday's historic 10% plunge. The island's semiconductor sector has been particularly hard hit, facing a stiff 32% US import duty. Moving on to European markets, they also looked poised for a stronger open, with Stoxx 50 futures rising 2.2%. In the US, S&P 500 futures were up nearly 0.9% in the early trade, signaling possible stabilization after Monday's turbulent session, which saw dramatic swings before closing with a modest 0.2% loss. The broader shift back towards riskier assets was also evident in commodities and bonds. Crude oil prices recovered after touching nearly 4-year lows, and gold slipped near a 2.5-week low as investors pulled back from safe haven assets. Meanwhile, US Treasury yields edged higher after recently hitting a 6-month low. President Trump, however, showed no signs of retreating, especially on China. On Monday, he threatened an additional 50% in tariffs if Beijing didn't pull back on its retaliatory measures. China, meanwhile, responded firmly, saying it would not bow to what it called the blackmail nature of US threats. For now, the markets are catching their breath, but few expect the storm to be over just yet.